Hello everyone and welcome to another Webinar Wednesday from the DTOS News Desk. My name is Mark Morell and I'm the Marketing Manager here at DTOS Group. I'll be your host for this session, but before we get into the webinar, we have a few notes to regard. Please send through your comments. We love hearing from you, our audience. We'll be hosting a curated Q&A session at the end, so do send through questions in the chat box. For those of you on the chat box, just give us a thumbs up right now so we know that you're there. We also need to note that the session is being recorded, and make sure to keep an eye out on the chat box throughout the webinar session, because we will be sharing some take-home information with you on our discussion here today. With me to help bring some clarity around the topic from the Mauritian Revenue Authority is Mario Anlas, who is the Technical Advisor to the Director General. We also have Mamad Uzia, who is the Director of Operational Services. From the private sector, Country Senior Partner of PwC Mauritius, Anthony Leung Shing. And from DTOS Group, our expert on tax, Madhvi Jiban. Welcome, 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 guys. All right, so apart from the COVID-19 outbreak, the Finance Act has arguably been the biggest talked about topic of 2020. With various amendments coming into effect, Mauritius has always been guarded as a tax-friendly jurisdiction, but can we still position ourselves that way? Let's get some clarity on the topic. Anthony, could we start with you, giving us all a bird's eye view of tax in Mauritius? Perhaps how did Mauritius position itself to be so favorable?
Well, Mark, what I'll say is that Mauritius has not always been a country where tax has been favorable. If you look back to the early 2000s, the tax rate at the time was about 35%, and if you go even earlier than that, it goes even higher. I think what has happened over a short period of 20 years, a lot of change has happened. And one of the reasons why the reform started back in 2006, 2007, is to bring along economic change and development. So today, while there has been some evolution in the tax system, I tend to tell investors if they know the 15% rule, they probably know Mauritian tax. So what do I mean by that? It's 15% corporate tax, 15% personal tax, and 15% VAT. So as simple, it's a tax system which is harmonized across the different taxes, and it's a 15% headline tax. There is no capital gains tax, there is no inheritance tax, and there is also no withholding tax on certain repatriation of income, such as dividend. So that's really the baseline system in terms of a headline tax of 15%, and there are some subtleties around certain businesses. So for example, for companies deriving certain types of income, there's a special regime called the 80% partial exemption regime. So companies earning foreign dividend, foreign interest, and certain type of investment management fees, they would get an 80% partial exemption. And that's available to the extent that the companies meet what we call the substance rules in Mauritius, or the core income generating activities. There are also regimes around tax holidays. There are 8-year tax holidays for global headquarter companies. There are 5-year tax holidays for treasury companies. So all in all, what I'll say, Mark, the Mauritian tax system, although there has been changes in recent years, is fairly simple and remain attractive overall. Okay,
so, you know, is tax the only reason for the success of Mauritius up until now?
For a country which had very little natural resources and which at independence was really set doomed for failure, the country has done really well. And I think if you look back into history, the things that has made the country really successful back then and now is around geographical location. I think if you look at Mauritius in terms of its positioning in the Indian Ocean, yeah, it was one label as the star and key of the Indian Ocean in terms of trade routes. And that geographical location still play an important role today in terms of convenient time zone, proximity to Africa and Asia, also helps it to be an attractive place in terms of the region. There are other factors such as the ease of doing business, I mean, in terms of the World Bank or in our political system, which has been stable. I mean, I won't go into too much detail, but all these have also helped in terms of making Mauritius an attractive place.
Great, thanks for that, Anthony. The Finance Act 2020 has brought some major changes in the tax landscape in Mauritius. Mahatma, from a corporate and personal point of view, can we still say that Mauritius is a tax-friendly jurisdiction?
So, thank you, Mark. Now, before looking at the changes that have been brought by the Finance Act, I think it's important to understand what do we mean by tax-friendly jurisdiction. I mean, of course, when we talk about tax-friendly jurisdiction, the first thing that comes to your mind is what's the tax rate.
Yeah.
So now, the tax rate, comparing tax rate between different jurisdictions is something which is complex. Complex in the sense that the different jurisdictions do not have exactly the same tax system that can be compared one-to-one. Taking, for example, the tax rate in Mauritius, we have got some individuals, for example, who are taxed at the rate of 10%, others are taxed at the rate of 15%, and we have got Solidarity Levy, where some are taxed at 25%. So how do we, what's the tax rate applicable in Mauritius? How do we compare that? So, I mean, what I want to say is that there is some complexity about it.
Yeah.
So, just before looking at these complexities, I would like also to highlight that tax-friendly jurisdiction is not limited to the tax rate. There are the ecosystem in which the taxpayer operates, the company will operate, which is also relevant. Like, for example, in Mauritius, you have got what we call a self-assessment system. It works well. It's easy. The tax system in Mauritius, Anthony said it, it's 15, 15, 15. So it's simple tax system. We have got cumulative PAY system. We have got no capital gains. We have got 100% electronic filing, electronic payment. I mean, things are easy in Mauritius as far as filing of returns, tax obligations are concerned. Now, coming back to the tax rate. Yes, Mauritius is still a tax-friendly jurisdiction. Why? Because of course, the tax rate has been 15% for a long time. Now, I know the question. There has been an increase in the Solidarity Levy. Solidarity Levy, I mean, it has been increased in the Finance Act 2020. It was previously 5%, now it's 25%. But what we tend to forget is that, coupled with that, we have got a limit of 10% of the net income as Solidarity Levy, which is a limit. So what does this mean? The maximum tax rate that an individual will pay in Mauritius is 25%. And we think about 25% when we compare it with other jurisdictions, it's still like friendly jurisdiction, because in many countries, the higher end, especially where we have the progressive tax rate, the higher end is above 25%. So in Mauritius, for the individuals, we have got like the maximum tax rate that somebody would pay is 25%.
Okay.
On the basis, let's take a company, for example. The company will pay, let's say, 15%. And again, it's very competitive jurisdiction.
Sure.
So these are if we can say, the major change as far as domestic taxes concerned, the Solidarity Levy. And the other thing that the Finance Act has brought is that with the Solidarity Levy, in order to facilitate the taxpayers, the employee, PAYE would apply on Solidarity Levy, such that when the employee would file his return at the end of the financial year, very often, if he don't have any other income, the return shows zero tax payable, because there is a cumulative PAY system which works together with the Solidarity Levy. And the annual tax will be the same as the PAYE that has been deducted. The other thing that has been brought by the Finance Act, and it's the subject of the day, we can say, it's about the CSG, Contribution Sociale Généralisée, which in fact has replaced the NPF, the National Pension Contribution. And yes, there are arguments against, there are arguments for, but it's a social system of social contribution that has replaced the national pensions. And the third thing that has been introduced by the Finance Act 2020 regarding the tax payment is the deferment of payment of tax for companies in the tourist industry. With the COVID-19 pandemic, we knew the borders were closed for some time and still closed, I mean partially closed.
Yeah.
We have got the tourist industry, which is in financial difficulties, and the Finance Act 2020 has deferred the payment of tax for these type of companies, so that 50% of the tax you will be paid in December 2020, and the other 50% will be paid the next year, June 2021. So these are the major changes that have been brought in by the Finance Act 2020.
Thank you, Mahmoud. So I've just, for those of our audience at home, and all of you as well, I've just seen a message from our producer. And for those of you having any technical difficulties watching this on the current platform, please go through to our Facebook page. We are live on Facebook as well. So just click the link in the chat box and you'll be taken through to our Facebook page. All right, so let's go back to you, Anthony. All things being equal, could you elaborate concretely on how a corporate company will be burdened by the new tax measures? Perhaps an example of a company of 50 to 100 staff, whether that's relevant or not, I don't know.
Okay, I mean, probably I'll take the impact of the CSG because that's probably the most obvious one. To be able to assess the impact of the CSG, we probably need to understand first what's the old system and then compare that to the new system.
Okay.
So if I take the old system of the National Pension Fund, I'll talk about two aspects. One is the cap that was applicable there, and then secondly, the rate that's applicable. So in terms of the cap which is applicable on the old system, there was a monthly cap of 19,900 rupees per month, and that's about $500, sorry, which is applicable to those earners. And the employee would pay 3%, and the employer would pay 6%, but that was subject to that cap. So now when we shift to the new system, there's two things. One, the cap has been removed, so there's no longer that cap of $500 per month per employee. And secondly, for employees earning less than 50,000 rupees, the rates has been halved. So essentially, employees would pay 1.5%, and employers would pay 3%. So taking into account and contrasting the old system and the new system, what I would say that the impact really depends. If you're in a company with a profile of employees who are above the 50,000 rupees, where the cap no longer applies, generally speaking, what we've seen is that the impact would be around a 6% increase in the cost. For companies where they are employing lower skilled workers, which essentially are below the 50,000 rupees per month, then they would see a cost reduction in terms of the impact of that CSG.
All right. Could I perhaps just ask an example? Would that be okay? So let's just, in terms of the tax residents of Mauritius, let's say I was earning 5 million in emoluments and 1 million in dividends. How will I be affected?
Okay, for this one, what we're talking about here is the Solidarity Levy as well as the personal tax. So for example, if you're earning 5 million emoluments and 1 million rupees of dividend, let me take the 5 million rupees of emolument first. Okay. So the 5 million rupees of emolument will be subject to a 15% tax under what Mr. Uzier said earlier under the PAYE, that's been deducted on PAYE. It will also be subject to what we call the CSG, the 3% CSG as an employee. You will suffer that. And you will also suffer what we call the Solidarity Levy. Because you'll be earning more than 3 million rupees, which is the threshold for Solidarity Levy, you'll be subject to the 25% Solidarity Levy on the excess of the balance between the 5 million you earn and the 3 million. So 2 million will be subject to the Solidarity Levy.
Okay.
And that equally will be deducted under the PAY system. Then coming down to your dividend, I understand you're earning 1 million of dividend. Strictly speaking, the 1 million of dividend is not subject to tax, assuming it's a local dividend. But because you're earning more than 3 million rupees, that dividend is now subject to the Solidarity Levy of 25%.
Okay.
So what would happen is we would add the Solidarity Levy you've paid on your emoluments, plus the solidarity you've paid on your dividend. And at the end of the day, there's a cap that's been calculated at 10% of the total emoluments.
Okay.
So I think in your case, Mark, if you're earning 5 million rupees of emoluments and 1 million rupees of dividend, the effective tax rate will be around 25% because you'll have that cap, which is applicable.
Great. One other question related to that. Are the tax resident expats eligible to pay CSG and Solidarity Levy?
Okay, I think the point I would like to make here, I mean, irrespective of whether you're an expat or Mauritian national, I mean, the Mauritius tax system is based on a residency rule. So to the extent that this individual is a tax resident of Mauritius, that individual will be paying taxes in Mauritius. And by resident, I mean someone who is domiciled in Mauritius, someone who has spent more than 183 days in Mauritius, or someone who has spent more than 270 days over the last 2 years. So that individual will be considered as a resident of Mauritius and will be paying taxes, both CSG and the Solidarity Levy in Mauritius.
Okay.
I think in respect of expats, one thing maybe I'd like to highlight is that that expatriate will be subject to all income earned out of Mauritius, but any foreign income is taxed only on a remittance basis. So that's the only peculiarity.
Okay, great. Thank you. Mario, I'd like to ask you a question. What makes Mauritius so attractive to African countries? Could you perhaps expand on the cost of doing business in Mauritius as opposed to other competitive jurisdictions?
Thank you, Mark.
Thank you.
I will try not to repeat what my colleagues have said. They have already given some factors which play in favor of Mauritius to attract, to be attractive as an investment, for investment. You know, I will start by saying I don't know if many of you know what was Mauritius in 1968 when we got our independence. We were a monocrop economy, covered by sugarcane everywhere. And where we came from 1968 to now, we can say, everybody will agree with me, that Mauritius has a proven track record. Since we got so many years, we have done a lot, and Mauritius has built its reputation as a secure, democratic state with a very strong legal system. And Anthony has spoken a lot of factors that have made Mauritius what it is today. Political, social stability, independent judiciary, that's very, very important. We are independent, but we still have the possibility to appeal to the Privy Council. Okay. And even for tax purposes, we have a lot of tax cases that have gone to the Privy Council. Mauritius have entered into many bilateral and multilateral treaties. Anthony talked about the pool of highly professional qualified people that we have, especially in the field of finance and ICT. We are bilingual.
Yeah.
Maybe we talk a lot more than bilingual, but bilingual is very important for Africa because we have got the French-speaking African and the English-speaking. So we are make sure we can mix with both French and English. And as I said, that we have adopted international standard best practices in many business sectors. My colleague talked about the efficient tax system, and Anthony also talked about, I won't be long on this, but we'll all agree that our system is very simple, easy to comply, 15, 15, 15, Anthony said.
Yeah.
We have, in fact, since 2006, you know that in 2006 we had a big tax reform. So we reduced our taxes, and we removed a lot of exemptions, a lot of deductions, very simple tax system, which make Mauritius a globally competitive economy. And apart from the lower tax rate, I have to mention that those exporting goods, they are subject, companies exporting goods are subject to only a tax of 3% on export. And so Anthony mentioned it, we are, I would say we have a favorable time zone, strategic location in the Indian Ocean, where we are. This is an hedge to act, in fact, we can see that this gives Mauritius an hedge to act as a bridge for investment and trade between Asia, Africa. We are strategically located.
Yeah, we are.
And for the past 5 years, you would see the investment that have gone through Mauritius into Africa have increased by 30% and amounts to approximately $40 billion, as I would say the statistic about December 2019. So Mauritius seeks to cater for valuable investment to Africa, and it is worth noting that some people say that if you have a tax treaty, then you will be able to invest in Africa. But from what I've seen, more than 40% of total investment are directed towards countries with which Mauritius does not have a tax treaty, or where a tax treaty is not in force. So that's very important, interesting. And I would say that the reforms undertaken at the highest level of our country in areas of transparency and substance have nurtured a stable, business-friendly regulatory environment. Further, you will know that we have a network of IPPAs, investment protection agreement, bilateral investment treaties, which call BITs, and tax information exchange agreements. You know, we have many treaties. We have about more than 40, 45, 46 treaties. We have 11 tax information exchange agreements, and we have also signed a multilateral agreement, mutual assistance agreement, multi-agreement, where we can exchange information with some 140 countries, which makes Mauritius being very transparent. And I think that to be able to attract investors in this environment we are living, we have to play by the global rules. And the rule of the game is we must have business that have substance, and we must be a clean jurisdiction. And I think that you all will agree with me what has been in the recent years. We have undergone a lot of changes. We have implemented the automatic exchange of tax and financial information under FATCA and CRS, Common Reporting Standard. We have undergone, as far as tax is concerned, we are on the whitelist of the EU and OECD. In terms of tax transparency, in terms of fair taxation, all our preferential regime have been reviewed, and with the amendments that we have brought to our law to remove any deficiencies that have been identified, I think that we can say that all our regimes are now for FHTP compliant, FHTP, that is Forum of Harmful Tax Practices. And Mauritius is a member of the inclusive framework, where we now are among the standard setters. We set standard. And we also form part of the World Global Forum on Tax Transparency. So it is noteworthy that according to the Region Profile for Doing Business Report 2020 in Sub-Saharan Africa, Mauritius scored 94% in the ease of paying taxes, which is one of the highest scores achieved by a country in the Sub-Saharan African region. I won't talk about the others because in order not to, about the World Bank report, but I would say that all these Maybe one piece of news which I got last week.
Yeah.
Recently, the Mauritius report has been highly commended among African zone. Indeed, in spite of the difficult period we are living in view of COVID-19, continuous infrastructural development in the Mauritius report has improved our ranking 9th worldwide as an attractive and highly commended platform for investment. And with the recent establishment of the Mauritius Africa Fund as a vehicle to generate funds for the development of special economic zone in Africa, Mauritius investment on the continent will be fast expanding, I'm sure about it, in new sectors. Maybe you ask me, Mark, to expand on the cost of doing business in Mauritius as opposed to other competitive jurisdictions. Certainly, Mauritius is not as expensive as Switzerland or Jersey. And as you may be aware, according to the Region Profile for Doing Business Report 2020 in Sub-Saharan Africa, in terms of costs as a percentage of income per capita, Mauritius is considered as a low-cost jurisdiction for starting a business, as opposed to countries such as Botswana, South Africa, and Rwanda. And I must also maybe talk about the incentives that we are taking to consolidate our legal and fiscal framework to position Mauritius as a low-cost jurisdiction. For instance, starting a business, we have made it easier by exempting trade fees for licenses below Mauritian rupees 5,000. In addition, we are also embracing the new era of digital transformation by, you know, that we have a fast-track system for VAT refund. We have the deferred system, VAT deferred system. We have also made it possible for we have an online platform which allows the online submission of amended corporate tax return. You can also, for example, online make an objection. You can object to an assessment, and you know that we have introduced a lot of law to make Mauritius, in terms of the tax system, being very transparent. We can't, our inspectors, our assessors cannot make frivolous assessment. Yes. When we make assessment, tax assessment, we have to give the reason for the assessment, the basis of the assessment. This is in law now.
That's great.
So I think that I have answered your question. All these initiatives that we are taking are reinforcing the position of Mauritius as a cost-efficient tax jurisdiction in the African continent.
Thank you, Mario. Thank you very much. Madhvi, why don't you add to this? Let's, Mauritius provides a gateway, as we know, to investing or expanding into Africa because of the favorable tax treaties and everything that Mario's basically gone through. We've also been experiencing clients as far as US and China setting up GBCs in Mauritius. Could you perhaps highlight the reasons why?
Yeah, thank you, Mark, for this interesting question. In fact, tax has not been the only factors to attract investment in Mauritius, be it inbound or outbound investment. Being a business and financial hub, Mauritius offers numerous advantages to investors worldwide, right? As rightly mentioned by Anthony, Mauritius, we rank first in the ease of doing business survey by the World Bank, and this has been continuously over a number of years. So this proves how, we can do business easily and smoothly in Mauritius. Besides this, investors, they look for political stability and also economic stability for the investment to prosper. So Mauritius is a rare example of peace and stability. Yeah. Besides this, we also have a sustained economic growth, which is very important for growth of investment. Besides this, I can also add that we do have a skillful bilingual workforce, right? And which is very important for our Francophone and Anglophone countries. We don't have an exchange control, right? But we have a strong compliance culture in terms of transparency, corporate governance, ethics, and a solid AML CFT framework. Recently, we have been adopted a lot of good practices which have been recognized by internal agencies like OECD, FATF, and the World Bank. We also an international arbitration center, right? This give us an edge over other countries. Our system, our legal system is a mixed one, which is a combination of the English common law and the French civil law. So this is also an edge. Our stock exchange, it is open to foreign investors to bring foreign capital, foreign talents, professional. We do have interesting schemes to attract talents, which are foreigners and professionals as well. As already mentioned by Mario, we do have a number of IPPAs signed with lots of countries, especially the African countries, which is very important for investment, for attracting investment in Mauritius. Also, our infrastructure is reliable, okay? And we have an efficient banking system with a number of international banks. And this is very important for timely transfers and transactions. Well, this is some of the non-fiscal advantages that Mauritius offers to investors. Now coming to GBCs, GBCs are global business companies which are incorporated in Mauritius, principally to do business outside Mauritius, right? This is something very interesting. These companies can provide a wide range of activities, right? From a normal investment holding company to financial services like funds management, leasing, brokerage. I mean, lots of financial activities can be undertaken by a global business company. A global business company also, the tax rate has been harmonized at 15% recently with the new tax reform, but these corporations can also benefit from the partial exception regime, where 80% of our income, specified income, can be accepted from tax. And this is an additional benefits for setting up structures like GBCs in Mauritius. So mentioning that, I mean, these are basically the main advantage we can give to investors, physical and non-physical. Thank you.
Thank you, Madvi. So I think 15, 15, 15, this seems to be a common thread in today's discussion. Just before we go into a final question with Anthony, just a reminder, we do have a Q&A session at the end after this question. A lot of you have submitted questions in the chat box already. This is a curated Q&A session, so that means that we've picked out some of the questions that we can ask. We obviously can't answer all of them in this session, but we will be producing some video content later to help answer those questions at a later stage. So please do keep sending through your questions, so we're on track. Anthony, so far Mauritius has been fully compliant when it comes to OECD and BEPS guidelines. Would you recommend other measures or initiatives that may enhance the competitiveness of Mauritius as a jurisdiction?
Well, Mark, I think before I answer the question, maybe I would like to add just one item that to the last about attractiveness of Mauritius. I think one point that's worth highlighting is our kind of membership to the free trade area, such as COMESA and SADC. I think that's quite important because it gives investors and potentially people coming set up operations and manufacturing or activities in Mauritius access to this market. And I think given that we are integrated to the region, it gives us a competitive edge in terms of an Africa position. I think that's quite important. In terms of the competitiveness and what Mauritius can do, what else Mauritius can do, I think what I'll say is let's look back in terms of what has been done in recent years. I think as you've said, we've become compliant with OECD and we've adopted BEPS. We've signed the MLI and our treaty has been amended. We've done tax reforms to our system in terms of changing the 80% deemed tax credit to 80% partial exemption. We've done pension reforms. So a lot, in my opinion, has been done in recent years. And yes, there is a first mover advantage in terms of complying first time and increased compliance over time. But there's also a first mover disadvantage because with more compliance, there's more cost, there's more administrative burden, And I think there's a balancing act to do. I mean, in my opinion, there is competitiveness in terms of, yes, transparency and compliance, but what's also very important to investors is the predictability and the certainty of a tax system. So I think for me, in light of all the changes and all what's happening at the moment, I would say in terms of our competitiveness, it's best to consolidate with what the changes we've made and to kind of enhance the predictability and the certainty of the system.
Great. Thank you very much. Right, so this is the session where we get into the Q&A. And thank you so much for all your questions. I see there's a few that we've got here. So let me just take a look at the first question. This is to be answered by the MRA. So I think between you two, you can decide who wants to answer the question. Are there any tax exemptions for entities in the Fintech industry incorporated in Mauritius? So are there any tax exemption for entities within the Fintech industry that are incorporated in Mauritius? Fintech. So I think that's, much like manufacturing's got certain benefits. If you set up like a little manufacturing hub, I think the question is around, are there any sort of tax benefits for setting up a fintech business within Mauritius?
I think there is a tax incentive that has recently been announced and included in the Income Tax Act. I think there is under certain conditions there is an 8-year tax holiday for the companies that invest in this in the fintech technology, and there are certain conditions that are attached to it, as far as I can remember, because MRA administers so many taxes, and you can't keep everything. I mean, in mind. I think there is. Yeah.
Okay, so there's an 8-year holiday. There's an 8-year tax holiday. So let's get some more information out to you.
Maybe I can add that. It's true that we are trying to develop that sector, and there will be incentive. But any incentive that Mauritius will give, we will have to comply with the international standards. So that's why when we announce certain incentive, there are also regulations which are developed in order to make sure that we have, we can give tax holiday, we can give tax exemption, but we must make sure that the business is being done in Mauritius. That is, with the BEPS action plan, that is, we have aligned taxation with where the business is being carried on. So even if the fintech, I'm sure but we have to see what are the conditions. I think Anthony will agree with me that when we have announced, for example, exemption in certain sectors, even pharmacy, manufacture of medical, appliances, all this we will have to be able to get that benefit. We must be able to show that the business is being done from Mauritius.
Yeah, agreed. All right, so question number 2, I think this is just working out the maximum tax here. It says, with the introduction of the CSG, the personal tax was obviously capped at 25%. I think that includes the Solidarity Levy, but it says plus 3% CSG. Wouldn't that then make tax 28%?
An interesting
Anthony jumps at it. Let's go for it.
I think, yes, I mean, as I was talking through your example earlier, there's the 15% tax and then the 10% Solidarity Levy cap, and there's a lot of question about whether that 3% CSG, is it a tax or is it a social contribution? And I think what probably the viewers is inferring here that 3% is a tax. I mean, then to the extent that 3% is a tax, yes, it would get to the 28%.
Okay.
Yes.
All right. So that clears that one up. Madhvi, this question is for you. To what extent are BEPS and transfer pricing regimes regimes entrenched in the laws of Mauritius. The budget of 2019 announced the introduction of CFC rules. Kindly advise when it will be implemented.
Well, in terms of the BEPS and the CFC rules, which has been just been implemented, I mean, this has been very important in the sense that we need to demonstrate substance, right? And in terms of implementation, maybe the Maori side can help, can confirm about when implication would be and when will it be implemented and effectiveness of it as well.
Mark, the CFC rule, in fact, has been introduced in Mauritius as a requirement when we were being reviewed by the EU.
Yeah.
And, you know, they wanted us to have, let's say, that anti-avoidance in the same as we have in EU state, because, you know, EU being EU, probably they wanted to see Mauritius having, because in their code of good governance, they wanted us to have the same standard as their, because we have a lot of competitors there, Luxembourg and all that.
Yes.
So they have CFC rule. And I don't think that we already have in our, it's already in force. And we already have in our legislation, tax legislation, some anti-avoidance provisions. Like we have a GAR, a General Anti-Avoidance Rule, which is similar to that of New Zealand. Okay. And I think that in terms of anti-avoidance rule, Mauritius have the got quite good rules to ensure that there is no abuse of the system. And as I said earlier, only countries that are conforming to international standards, and Mauritius has always play by the international standards, those countries will really attract investors. Okay. You can't be in that game. You can't try to be attractive to investors if you don't adhere to international rules.
Okay, thank you. Right, the next question. Is it not the moment to revamp the financial industry, coming up with new derivative financial offerings and target new markets apart, focusing on our fiscal attractiveness to enhance business affairs in Mauritius? Thank you for that long question. That was a tongue twister. Let's try that again. Is it not the moment to revamp the financial industry, coming up with new derivative financial offerings and target new markets apart, focusing on our fiscal attractiveness to enhance business affairs in Mauritius? Anthony, do you want to go for it? Should we give him the mic? Thanks.
Yeah, you know, I mean, the industry has long been in a position where it needs to reinvent itself. I mean, we've always been talking about moving up the value chain and doing things differently. There's been various committees in terms of looking at the financial services blueprint, and, you know, new products like financial derivatives or tax-exempt funds, etc., are being looked at in terms of looking into new waves of growth, such as fintech and blockchain, as was referred to earlier. Mm. So for me, what we're seeing here is how to leverage other attributes, like my fellow panelists were talking about, in terms of the environment, in order, not necessarily only the tax, but also the other attributes, in order to enhance our kind of growth. And what we've seen nowadays is that there's more a push to leverage in terms of our services itself, rather than the attractiveness of the treaty network. For example, what we've seen is a lot of companies having bought, you know, management companies or trust and fiduciary companies coming and set up shared service centers. I mean, in Mauritius, where it is really becoming an outsourcing outfit. So where you're competing there is not necessarily on tax arbitrage, but looking at really the quality of the service, the cost, the people, and even from a PwC standpoint, what we see is a lot of the time we're now becoming centers of excellence. So for example, within the PwC network, we've now developed software that's being used internationally. And we're also doing outsourcing for a number of jurisdictions. So we're not only leveraging on the tax attributes, but more on the skills and the resources that our people have.
Okay, great. For Mario, we know that fiscal policy is a great tool to promote some sectors via tax incentives. Are there some sectors in Mauritius that benefit from tax incentives which would give an indication on the direction of where the authorities want to drive the country?
In fact, apart from our system being a low tax, as I said, there's a lot of incentive in various areas, and you will see that recently we want to promote, for example, manufacture of production of pharmaceutical products.
Yeah.
And we have a tax holiday. You will see in food processing, there's a lot of tax holidays in terms of, we have talked about in terms of investing in Africa, I think the developers, the financing, we have given tax holiday. There are exemptions in tax holidays for global treasury, global headquarters, wealth, how you call it? It was called overseas family office. Now they have removed, I think in a regulation that will come, they have removed the word overseas in order not to give it that you just look at overseas, so family office. I think there are many areas and where government want to promote. It's the same as when I talk about when we got independence, we did not have any industry. We wanted to promote textile.
Yes.
We gave tax holidays. So in many areas like the farming, fish farming,
Yes.
there are certain areas that we want to promote in terms of, they have talked about deep ocean air conditioning system. So there's a lot of areas. There are even areas where, we can't give exemption for the time being because we don't have, but we want to promote those IP, intellectual property, but intellectual property business, they have to comply with the nexus approach. And, whatever development in terms of research and development, it has to be done from Mauritius. And I know, we know that we have a lot of talented people here. So if we can encourage people to be creative, and I'm sure that there are a lot of incentive. We have given incentive in terms of research and development. Yeah. That is, we give double deduction, but unfortunately, nobody has taken advantage of this. I don't know why, and is it because of we have regulations on this? Because we have to, to be able to give incentive in terms to, let's say, take advantage of the incentive, we have to comply with international rules. We won't be able, like for example, if we say we are sovereign. As far as taxation, nobody can tell us whether we have to tax at 50%, at 15%, or we have to give exemption. We are totally free. Our government is free to decide about our tax rate. So if we want to encourage a new area, we can give tax holiday. But we can't encourage multinational to shift profit. We have to have the activity here.
Okay.
If we have the business here and we have substance in terms of qualified people that can do the business, and in terms of spending money here, operating expenses, we have the company here, then of course we can. There's a lot of incentives that has been given. You just go through in the last budget, I think we talk about the it's a question of food, medicine, having to do with food. If you
Yes.
let's say healthy food, You can
It's a
give... there's-
complicated name.
Yeah.
Yeah, yeah.
Nutra-
It's sounding complicated, yeah.
To remember, yeah.
Yeah.
So the last budgets in the last years, you have seen that we have given a lot of incentive, but to make sure that we can take advantage, we have to make sure that we have the people to do that type of business in Mauritius.
Absolutely. Well, let's see what we can do to attract those people here. Another question. Clean jurisdiction is a must in order to abide to FATF and OECD and EU guidelines in terms of compliance. Nowadays, compliance is a defining factor of a jurisdiction's future. This is for you, Madhvi, what are the implications of the different MLRs enforced as from the 1st of August vis-a-vis our DTAs?
Indeed, Mauritius has signed the MLI Convention, as you know, in 2017. And as from February 2020, we are subject to comply with the MLI standards. Currently, we do have 44 countries with whom we have DTAs. These countries are on the MLI. So we need to have meetings, consultation with the treaty partners to align ourselves with the OECD standard based on what has been provided by OECD in respect of the treaties. With the MLI, we will be at par on the treaties. So it won't be like we can have like a bilateral negotiations with treaty partners. Okay. That would be difficult. So we will have to abide to OECD standards, and also we will be at par with most countries.
Can I add something on this? You know, it's important to know that with the BEPS project, we have committed to comply with a minimum standard. And there are certain things that are in the treaty, that are BEPS treaty related. And we are not obliged, that is, we don't have an obligation to have a multilateral, because the MLI is a multilateral agreement. We can do the changes bilaterally. But the thing is, bilaterally, it takes time. And when we have the peer review, we have had a lot of peer reviews on MLI. So far, we have not got any adverse report, because we have done what should be done. As Madhvi said, we have ratified the MLI, but for the public, you have to know that not all the treaties, because the MLI don't work like you amend by protocol your treaty. The MLI will stand with the old treaty, but it has not yet become, it may have become in force, but not in effect. There is a difference between coming into force, we have ratified it, but it is not yet applicable because you need the other country also to have signed and ratified the MLI. So true it is that we have covered a lot of agreements, but some other treaty partners have not yet ratified the MLI. So it is not yet, it has not yet changed. And I must say for those who are listening or looking at us or interested in treaties, we don't have any legal obligation to have a text that is how it has modified our MLI. But we are going to put on our website once we are in engaging with our treaty partners. So we have done certain texts where we have modified our treaty, but we are consulting our treaty partners. We have so far done it for about 11 countries, which have already ratified. So once it's ready, it will be on our website to show to the interested parties, to our stakeholders, how the treaty has been changed. But I can say that in terms of change, it's only to be BEPS compliant. It's a question of now it's not only avoiding double taxation, but also not giving any opportunity for double non-taxation. And it's also, we have an anti-abuse provision saying, because we have, in fact, signed for all the minimum standard, there is an anti-abuse provision, and we have opted for the principal purpose test. Because we, Mauritius, thought that LOB was not good for Mauritius because it would have, in fact, many of our businesses, because the LOB, which sometimes they call simplified LOB, in fact, it's a very, you have to comply with the LOB and then the PPT. The principal purpose test, being given that we are encouraging, we have in our law, we are saying that business in Mauritius must have substance, and being given that there will be substance, I'm sure that we will not fall short of the requirement of the PPT.
Thank you,
if
Mario.
there is substance.
Thank you. Thank you very much. Anyone would like to add anything more to that? Or?
Yeah, I have a question in respect of that. Given that our treaty with Zambia and Senegal has been terminated, so how would MLI come into that?
We have, if you go to our website, you will see that the terminated, it's normally the treaty is still in force until there is a date. I think for Senegal it will be next year. In fact, it is from 1st July 2020 for Mauritius and 1st January 2021 for Senegal. But Zambia also, we are discussing with them because already before the termination, because Senegal thought that they did not have taxing right, that's why they have ended our treaty. But we were already discussing a new treaty to make it BEPS compliant. And Zambia, I think, has announced that they will negotiate a new treaty with Mauritius. So there are contact with both Senegal and Zambia with a view to have a new treaty, and I think we will try to make sure that there is no big gap between the cessation of the termination of the treaty and the new treaty that will hopefully will be able to have a new treaty that will be BEPS compliant. And I think Mauritius is looking at, if you look at the recent treaty, which is not yet been in force with Senegal, with Kenya. The African countries, some time back when they negotiated the treaty, probably they sent people that were not very interested. They were more interested in investment than in taxation. But now they are trying to have treaties where they have their taxing right. And I think Mauritius is not against that. We know that we can discuss and share the taxing right, because if you see why Senegal, the treaty has been terminated, it's because when the negotiators came, they were not interested in their taxing right, and naturally, we were having all the taxing right, and this is why probably they thought that the treaty was not good for them. At that time, they put more emphasis on having investment than on having taxation.
Exactly. Fair enough. Well,
can I have one word?
Yes.
So,
go for it.
I wish to bring some clarity about what we said earlier about the fintech activities.
Okay.
Now, fintech is a term, it's wide. The exemption that we have been giving, it's about the peer-to-peer lending platform. It's specific for a specific activity, and it's 5 years exemption. And there are, of course, as I said, a number of conditions attached to it. So I wanted to bring this clarity. I just checked it with Anthony now.
All right, great.
Maybe just adding on the issue of tax treaties. That has been the subject of significant debate. Recently. There's been a lot of concern raised by investor community around the termination of certain tax treaties. I think, as Mario said, I think every treaty is entered into with certain objectives in mind at the time of negotiation. And I think over time, the initial objective of trade, of investment and protection, etc., evolves. And I think, as we probably see in the current environment, a lot of those are where the original intention, the new intention are not aligned. There will be discussions around that. But I think it's a natural part of a treaty life, and natural in terms of the geopolitical environment as well for these things to happen. I think it's inevitable in a certain sense.
Okay, great. Thank you, Anthony. Well, that's all we have time for today. It's time for us to bring this to a close, and I think that we've touched on some very important points and brought some clarity around Mauritian tax laws. If you're watching this and you'd like to know more about the topic, please send through your request to info@ditos-mu.com. Thank you again to our panelists for taking the time to share your valuable insights around this topic. We really, really do appreciate your time. And don't forget to follow us on social media at DTOS Group on Facebook as well as Instagram. And obviously we're on LinkedIn as well. And from all of us at the DTOS News Desk, that is a wrap on Webinar Wednesday. My name is Mark Morell, and we'll see you next time. Thank you. Thank you very much. Thank you very much.